Those at the bottom are getting hurt, and we just get a continuation of the wealth inequality gap. Is that your read on this as well?
Well, that's always the case, right? Because the wealthier people don't spend nearly as much of their incomes as the poor or, let's say the middle class. In many cases, they have to spend everything that they earn. And so as the cost of living goes up, it more immediately impacts their quality of life, because obviously if you're spending everything you earn and now the price of food goes up, the price of energy goes up, you have to cut back spending someplace else. I mean, unless you've earned enough money to equal the rise in cost, and very few people are. I mean, even if you look at the government numbers, wages are going up much more slowly than prices. And so you're forced to cut back. But let's say you're very rich, and let's say you're earning $1 million a year and you're only spending $200,000 a year, and you're taking the other $800,000 and you're just investing it or you're saving it. And if now your cost of living goes up and now you need $220,000, well, you just save a little bit less. You invest a little bit less, but it doesn't come at the expense of your standard of living. You're not giving up something that you otherwise had. You're just, you just don't have enough left over for savings and investing, which has negative consequences for the economy, because that saving and investment is what grows the economy. And so if somebody needs to save and invest less because they need more to survive because the cost of living has gone up, then that hurts society. But as far as the immediate pain for the individual, the more of your money that you spend, the more impactful rising costs are. That's why inflation is such a heinous tax, because it falls most heavily on those who can least afford to pay it, and that's the lower class or the middle class income earners.
When you start to think about how this affects what people are paid, we have 10.5 million open roles in America, highest that there's ever been. Unemployment still hovering around 5% or so. How do you think about wages, the hourly rate, minimum wage? Some of the data that we recently looked at was 80% of American workers now make over $15 an hour. Amazon just committed to hiring tens of thousands of new workers. Some of them they're going to pay $18 an hour. Like, how do you just view the wages and the movement that we've seen over the last 18 months and where we're going on that front?
Yeah, well, wages are going up for a number of reasons. In addition to inflation, wages are going up because the government is incentivizing people not to work. And so therefore you have to pay them even more money to encourage them to give up those incentives, because all else being equal, people prefer leisure to work. So if the government makes you a good deal not to work, the employers have to make you an even better deal to work. And then, of course, you have things like the minimum wage law and occupational licensing and other things, workman's comp, Social Security, other regulations that the government implements that drive up the cost of hiring people, and therefore, wages are being pushed up. All of this ultimately has to be borne by the consumer of the products, because whatever it costs a company to employ the labor, all of those costs have to be made up by the end customer in whatever good or services they're buying. And obviously the people who are most impacted are the elderly, people who are living on fixed incomes, because they're not getting wages. Their incomes are fixed, and yet their costs are going way up. The people who are getting pay increases have a little bit of a cushion, although again, my thinking is all these people who are taking these $15 an hour jobs or these $18 an hour jobs, those increases are not even going to be enough to cover what they're about to experience as far as their cost of living. So they would have been better off if they were still earning less money and their cost of living hadn't gone up as much, because they're going to be behind the curve. And also what's going to happen is a lot of these jobs, because of how much more expensive they are, they're going to end up getting eliminated. So a lot of people will be priced out of the market. Businesses will automate. They'll outsource, or some companies will just go out of business entirely. That their customers will not be able to afford their services if they have to pay those rates, and so they end up, closing up shop, and now they don't need to hire anybody because they don't have a business anymore.
When you think about what they should do, if you're the head of the Federal Reserve, Treasury, or you're in the room with them, what would you suggest that they do? What's the solution?
Well, the solutions are simple economically. It's just that the consequences are grave politically. And that's the problem. You have to realize that the Fed is trying to make policy for political reasons. So they're not trying to do what's right. They're trying to do what's expedient. And so I would be different. See, I would actually want them to do the right thing, but they don't really care about doing the right thing. That's not their objective. But assuming they had that objective, then the right thing is really easy. You just back off of the quantitative easing and you let interest rates go up. You tell the markets in no uncertain terms, the Fed is no longer in the business of buying any U.S. debt. We're not going to buy any mortgages anymore. We're not going to buy any U.S. treasuries. We're done. There's no taper. We're done. In fact, we are going to take whatever opportunities we can to reduce the size of our balance sheet right now, right? And then if they do that, well, then interest rates are going to skyrocket, right? And that has to happen. And when that happens, all hell's going to break loose, right? I mean, stocks are going to crash, real estate's going to crash, people are going to default on their loans, the government's going to have to massively cut spending and level with the American public that not only can't we afford all this new government spending that the Democrats are talking about, we can't even afford to pay for the stuff we've already promised. We can't even afford to pay for the stuff that we already passed decades ago. We don't have the money. So that's going to set off a whole, chain of dominoes falling if the Fed does the right thing. But the sooner we do the right thing, the better. Because all this bad stuff is going to happen anyway, eventually. It's just that the sooner we allow it to happen, the less bad it's going to be. Because the only way to delay the day of reckoning is by making that day much, much worse. So I don't want to do that. I'm not about making the pain worse. I want to get the pain over with. Like, I want to rip off the Band-Aid. I don't want to slowly peel it off. And it's not hard to do, once you really understand what the problem is. But you have to have the political will to sit back and, allow the consequences to play out.
Gold is currently around $1,800. I'm sure you're jumping up and down naked in your bedroom when gold goes up. What is your price prediction for gold by the end of the year?
Well, obviously, I don't have one. I mean, I don't know where the price of anything is going to be at the end of the year. But, I do think that it's more likely to be higher rather than lower, although it's possible that it could be lower. But if it is lower, it's not going to stay lower. I mean, gold is ultimately going much, much higher than 1,800. And when I say ultimately, I don't mean like, in 100 years or something like that. I mean like now. I mean soon. It's going to go up. And I think the only reason that gold is not already a lot higher than 1,800 is because most people still believe the Fed. For whatever reason, the Fed still has a lot of credibility. And so do other central banks. And so when the Fed says inflation is transitory, they accept that. When the Fed says we have the tools and we will use them to make sure it's transitory, even if in the event that it's not, the markets believe the Fed. So the market is not looking for insurance. It's not looking for inflation protection. The market is just looking for risk. The market is just buying whatever's going up. Everybody is optimistic. They think the party will never end. And so they don't really see the reason to hold something stable like gold, something that's regarded as a safe haven or as an insurance policy. They want to gamble. They just want to keep on buying the stuff that's hot. And that includes a lot of different types of stocks, a lot of these momentum stocks or meme stocks. These risk assets, and it includes, what you guys talk about, cryptocurrencies, digital assets, Bitcoin, Ether, or these NFTs, right? That's what people want. They just want all the stuff that's going up, and they don't even realize that the reason it's going up is because of all the inflation that the Fed is creating. And if it ever actually tried to fight that inflation, all that stuff would come crashing down. So, but they haven't connected those dots yet for whatever reason.